We are looking at a chart of gold, and in this video I thought I would go through the trade potentials, that the opportunity, the setups that we could have traded yesterday, Monday's trading. Okay, so these are all hypothetical examples, but this is how you learn, and this is actually how you should be studying your charts to identify where your setups have formed that you have missed, because that's how you will find them in real time in the future. Okay, timing is the key. So the first thing to note is that it's very clear that we've been going down, right? That we've been going down all last week, from Wednesday, Thursday, and Friday. So clearly order flow is bearish. So you only should be looking for shorts at this point in time. Okay, now you only look for shorts until you're proven wrong, right? Until you really see a clear change in direction. So we're only going to be looking for shorts. Not only that, but I did. So this is the last Friday's low, and this is Monday. Okay, I also did post a potential area that is a point of interest down to 2390. So for me, I'm only looking for shorts until we get down there to 2390 or lower. Okay, so you got to have a bias, and it's easy to identify the bias by just identifying what has the market been doing and just following that until proven wrong. So we know from last week, Wednesday, Thursday, Friday, we've been going down, so we assume we're going to continue going down. Okay, until we are proven wrong. So let's just assume we are bearish and we're looking for setup. Now time is then what's important. Okay, so here is Monday. Monday initially, well, this is Sunday here, but it's really Monday. Okay, I ignore Sunday. Now this is Asia. Okay, Asia starts at 8 p.m. Now, what can we see here? I've always said in my recordings to look for the second hour. Okay, so if Asia starts at 8 p.m, the second hour is 9 p.m. So in 9 p.m, this is 9 p.m. What does 9 p.m. do? 9 p.m. takes out the high, right? This is the Sunday session, which I ignore, but that is basically the high of the day. And then what have I shown you before? This is a 3-bar pattern where you take out liquidity, which is what this bar does. Look at the time there, 9:30 p.m, right? The second hour, and 30 minutes into that second hour. Okay, we get an engulfment. So order flow now is confirmed to be bearish on this day. Even though order flow in the high time frame is already bearish, this is basically confirming the order flow on the timeline, in this case the Asia session. Once you get that engulfment after taking out that high, this exact 3-bar pattern, which I've spoken about even just in my last couple of videos, is a change in state of delivery, okay, for price. Now you can take your entry there, but your stops need to be up above the high, which is the high of the day, okay, and obviously the high of the week, because starting of the week is Monday. And your immediate target can be just down here to rebalance, okay, down to this down candle. So let's assume we've taken that entry after this engulfment, and we're targeting rebalancing this big up move, that there's 80 pips. Could we potentially take 50 pips out of that? Yes, we can. That's all that's needed, and you're done for the day. Okay. Now you can wait for a pullback into this fair value gap, but you may not get it, so you may miss out, and maybe that's okay. Maybe you're okay if you don't get that pullback to miss out. That's fine. You wait for the next opportunity. Okay. So that's the Asia session. Okay. The next kind of move up, you want to be shorting at key times when you see key things happen on your charts. So the next time, London just consolidates, right? This is where London does nothing, okay? But it does create liquidity above, does create liquidity below, okay? And then you get this pump up at what time? 7 a.m. is the start of the New York session, right? So 7 a.m. we see what? The exact same pattern. What do we do here? Now, because we already have in Asia a change in the state of delivery, this high is the high of the day and the high of the week on Monday, and this high really is safe. It should be considered safe because this is the change in state delivery, and there's two targets, right, on this way down. This is the initial target to rebalance this up move, but on a Monday, if you are bearish, which we are, right, Wednesday, Thursday, Friday, we've just been going down. There's no change in direction at this point. Our targets are lower, 2390. At this point, we haven't reached 2390, okay? So if this has already been reached and we have another signal, right, the exact 3-bar pattern, that's now confirmed with this down candle at what time? 7 a.m. Then high probability we're probably going down to attack Friday's low, which is kind of expected on a Monday, especially after a pump, right? When high time frame order flow is bearish, which it is since the Wednesday prior to the current week, Wednesday, Thursday, Friday last week, we've just been going down. Okay, and so what it's doing, this is pumping up, but where's it going? It's going to these up candles here. Okay, this is the bearish order block. Now we have moves here as well coming into that, but this also comes into that, and there is a small little fair value gap that this also has traded into, but basically this move at the open of New York, well, this is exactly at 6:45, so 15 minutes prior to the open of the New York session, he takes out all these highs. We're not expecting it to take out this high of Asia. Asia has made the high of the day, high of the week, because of this engulfment candle, which is a change in state of delivery confirmed on this day after getting this pump up. Okay, this was the manipulation early on. Okay, so we get the same pattern that I've been talking about, this 3-bar pattern that takes out liquidity, which is all these people who may have been short in London. Okay, and then engulfs, confirming change in state of delivery from this move up to now bearish. Okay, and liquidity resides at these lows, so that could be a target. Okay, so if you take that, go down to there, that's more than 50 pips. Again, you can take your 50 pips and walk away, but you can also target these lows, the Friday's lows, which you can see is exactly what happens at 8:30, which is the New York session second hour. Again, second hour, 8 a.m. and 30 minutes into that second hour is 8:30. You reach the low of Friday. So if you did take the entry here, after this engulfment at 7 a.m., targeting low Friday, that's over 100 pips. Okay, so multiple opportunities to go short on a day where high time frame order flow is bearish. You need to find the setups at the right time. Of course, we're looking at a hypothetical example. I didn't take any of these shorts because I wasn't looking for shorts. Even if they were there, I wouldn't take them. Why? Because at this point where we are at the low of the week, we're at the bottom range of the target, and I don't want to trade short into the low of the week. I'm looking for reversals here. I may not get that, but that's kind of what I'm looking for. Maybe not full reversal, but at least pullbacks from all the shorts that have been going on since last Wednesday, Thursday, and Friday. These are scalp trades, which you can take. If these were if you had a bigger pullback, then I may have looked for scalp trade shorts, but I'm not. Even though these are valid setups, and we do have this pump, and we do have Friday's lows intact, I still don't prefer to take these entries short because I'm not someone that likes to short at the low of the week, okay, and at the low end of the target. So that's why I didn't take these trades. But it's good to learn what your potential setups might have been on the day. What have you missed? Because that's how you're going to learn. Okay, even if you don't take these trades, go back and look at the charts. Look at the key times. What did Asia do? Did Asia provide any setups? Yes, it did. Took out the high of the day, high of the week, engulfed, which is a change in state of delivery at the right time. Took out the high of the week when? 9:30 p.m. That is the perfect time for an Asia setup. Confirmed when you get this engulfment of this up candle that took out all that liquidity. You can wait for the pullback into the fair value gap, but you may not get that. Like if you look at the New York trade after the engulfment, we didn't come back into that level there. Now that's a great zone to mark out for future because the market will eventually come back to there. So if there's a long setup later on in the day or the next morning, like today, that will be a reasonable first level target, okay? Because there's an open gap there from previous day New York. If we're looking at this today, which is Tuesday, this is Monday sessions, right? So the New York session, nice entry engulfment back into these three up candles, which is a very shorter block, okay, after taking all this liquidity. There's lots of liquidity residing below as well as Friday's lows as well, okay? And obviously Friday's lunchtime session lows as well, which I like to target. But there's a clear low there on a day or a whole week where order flow is bearish. Okay, so always go back and look for your setups at the right times: Asia, London, New York, in line with the high time frame order flow. Okay, order flow is still bearish. Now we've taken at the low of Friday. We may now look. The market may now be changing direction. So this gap still is valid, right? So we probably will tap into that at some point. These highs are valid. Okay, we have now reached that 2390 that I was looking at. Posted here last week, so we've now come into 2390. We've balanced this gap. Let's look at a 4-hour chart. Okay, 4-hour chart. Where are we? Here we go. 4-hour chart. You can see that this was that level I was looking for. Okay, on Twitter where I've posted it. Okay, so we've now come into that 2390. Okay, so this is a 4-hourly chart, and this gap was chosen because there's a nice low there, liquidity. And let's look at this now because there's a couple of things I want to point out on this chart. So we've come into there. You can see we've come into that level. Okay, we've gone below that low and rebalanced that gap that I had posted here. Okay, and this level here is important. Okay, notice that the body candles are still, this is just a stop hunt, right? We did not close below this. The body candles are still just within that low. So to me, this is a stop hunt and potential for a pullback. Look at these equal highs, 2, 4, 1, 2. Okay, so I'm looking at that. If I do get a nice long setup at the right time, that's kind of what I'd be targeting, those equal highs. This is obviously a 4-hourly chart, so we want to find our entries on lower time frame. Equal highs here as well at 2400. Okay, key levels. So I'm pointing out to you some key levels. Okay, so watch them. Now, this is important because this was the last long that I did. When I was long in the market, I took entries from here that I've spoken about. Okay, Newsday came into this to rebalance this. Now, we've come back and now we've stopped anybody out that was long from here. Okay, and also come back into, let's put a line here, now into that same level. Okay, so that level is important. That's where we had a nice price displacement from. We've come back down into that same level, stopped out anyone that had stops below this by this wick. Okay, but we haven't closed below that wick. So to me, that indicates that is an important level. Okay, we wick down and we still haven't had an engulfment. So this is another 3-bar pattern on a 4-hourly chart, much more powerful, but we haven't engulfed the high of this wick. Okay, so monitor this chart on a 4-hourly. There is a gap here. I don't think we need to come back down here. I think this gap will remain open for now, but good to have on the charts. Based on this, we need to see how does this 4-hourly close. Okay, we've taken out previous Friday's lows, closed this gap on high time frame, come into this order block again. Okay, now where's the daily order block? Let's have a look. So this is the daily order block as well. We've come into it. Okay, so this is an important level, and you can see how the market's reacting to this level. Okay, so watch the market over the next couple of days. Hourly chart. This is where we've wicked, or we've come down into Friday's low and completely rebalanced these gaps. Okay, and now we need to see. Do we start to have bullish order flow? At the moment, we've still got these up candles holding price. Now, on an hourly chart, we do have this 3-bar pattern, okay? But the middle candle has not taken liquidity, so I really wouldn't suggest that as a high probability 3-bar pattern. I like to see the middle wick take out the liquidity. The lows here are high, and that could indicate low liquidity resistance potential, okay? I like to see each one of these lows lower, so that the middle candle here takes out liquidity, right? And then you get this engulfment. But this is still valid, but lower probability. So we need to monitor, okay? At the moment, this could be, we need to see do down candles, do we get above these down candles and are down candles supporting price, okay? This could simply be coming back up to this bearish order block, okay? So we had a nice displacement. Have we touched this bearish order block yet on this hourly chart? Okay, yes we have. So this could still be coming up and still be going down maybe to this fair value gap. We need to kind of monitor the charts, okay? Need to see how Asia trades. Do we see any bullish order flow in Asia for scalp trades? I'm looking at Asia now, 15-minute, and still there's gaps here, okay? So this could still come up to these gaps, fair value gap, and still roll over. We really want to see these kind of movements. You know, are these down candles being supporting price? So we've got a down candle here. This could be the order block now as we start to go up. We need to see, do these down candles, as we're coming back down into them, do they support price? Okay, so if we can hold this level, because this was the last up candle that made this down movement, takes out all this liquidity, we now start to trade above this zone, which is basically a mitigation area. If we can hold price here and continue going higher, then we could be having a bigger pullback, which would be good. This would be indicating the start of bullish order flow, okay? You have a swing low here, high, lower low, higher high. This should be the bullish breaker, and so we need to stay above here. So these down candles need to now support price as we move higher, and then these order blocks should support price, okay? So that's kind of what I want to see. I want to see this continue now showing us bullish order flow. Then to look for, I think this will definitely get hit, okay? I've already mentioned this. This is from yesterday in New York, 7 a.m. session, okay? These highs of Asia, that's what I want to kind of see. Previous day highs should be hit for continuation bullish momentum, okay? So what I see here is 2391, the level that I mentioned is holding, okay? We've gone through there on a higher time frame. That was a wick. We've rejected, come back into the price zone, okay, to go higher. That's kind of how I'm seeing this as this is trading right now. So 2391 to me is holding. That's what we want to see. We've come down here, come down in a wick on a high time frame, stopped out some people. So if we go back to a 4-hourly chart, you can see that the bodies of these candles are all above 2391. So 2391 is holding, okay, because the bodies are above there, and anything on this wick, that's a nice rejection block on a 4-hourly. We've already come into that rejection block. I'm going to take that off, and what I like to do is I like to mark these rejection blocks, okay, like that. And anytime price comes back into it, you want to see that it stays above the midpoint of that rejection block, okay? Same thing here. This was a rejection block, okay? Same thing here. This was a rejection block, right, from the move up. So anytime you see these rejection blocks, this is coming to this order block, okay, down. And if you get price trading into there and remaining above the midpoint, I've spoken about this previously, then that's kind of an indication of bullish momentum starting, okay? So we're now seeing the same kind of thing here, okay? We've got a rejection block. We're seeing the price is above the midpoint of that rejection block, starting to see bullish candles. And equal highs, so there's plenty of liquidity above at 2412, okay? Now we just want to see, how does Asia trade? Do we get a setup in Asia at the right time, which is what, 9:30 p.m. Okay, time at the moment is only 8:12 p.m. So Asia has just opened. So let's see, right? Look for your setups. You need to know what your setups are to be able to find them. Okay, so I hope the video was useful. This video was really about going back and looking at what were the opportunities that were not traded. Okay, like in this Asia, we had 2 sessions here, 2 entries, one at this engulfment, second back into the fair value gap for a target of this pump up, easy 50 pips, and then one again in New York, 7 a.m. with this engulfment for target. This target's already been taken, so it could have been these lows, again, easy 50 pips, or the low of previous Friday, okay, on the Monday, again, easy 50 pips, okay. So I hope the video was useful. I will now talk with you in a future video.